How far down the road should I start with my planning?
Could take months, could take years to do some savings.
Let's talk about budgeting. What should they be looking for?
You're going to be paying property taxes, insurance, and then utilities.
But what about their debt load?
Take as little debt as possible into the home buying process.
Hello, folks, and welcome to the Mortgage Den. I'm Nick Da Silva, principal broker here at Northwood Mortgage. And with me today, Brian Greenwood, one of our top mortgage agents here at Northwood Mortgage. Welcome, Brian.
Thanks a lot, Nick. Great to be here with you today.
Thank you for coming today. To my loyal listeners, we're going to talk about the first-time home buyers and buying a property and all the pitfalls and all the things you need to know about getting into buying a new property. Let's get started. I'm looking to buy a home. I'm a first-time home buyer. How far down the road should I start with my planning?
Well, Nick, in terms of how far down the road to get started, one of the biggest things about becoming a home buyer is having some savings for a down payment. And, that can take as long as it can take.
Yes.
Sometimes there's help coming from somebody like mom and dad. Sometimes we've already got some savings, but that's the thing that tends to take people the longest.
Right.
And maybe don't realize at first. Could take months, could take years to do some savings. But let's say you've got some savings and you're ready to think seriously about buying a home. It's a great idea to give yourself 6 to 12 months. Go through the process of budgeting and preparing the financial side of.
You brought up some good points. So let's start with budgeting. I mean, most people, when they're first-time home buyers, don't realize all the extra costs that go into buying a home. Let's talk about budgeting. What should they be looking for?
Well, people who are thinking about buying a home often are renting, so they may have some costs to putting a roof over their head and often comparing what's it like to rent, what's it like to try to buy. So, once you become a homeowner, you're probably going to have to make a monthly mortgage payment. But in addition to that, you're going to be paying property taxes, you're going to be paying insurance, and then utilities might be comparable to your rental situation, but the new ones are going to be the property taxes and the insurance.
Now, there's also some pitfalls a lot of people unfortunately run into when they are looking to buy. What are some of the pitfalls people run into leading up to buying a home that you've seen in the past?
A lot of times, quite honestly, people who aren't financially ready, and what I mean by that is people who don't have much of a down payment. It's really tough to get started. We've got great programs with insured mortgages, and I'm sure we'll talk about that along the way. But, in some situations, you can start with as little as 5% down. But when you look at the cost of a home these days, 5% is still a pretty big number. And in addition to that, you need closing costs. And I'm sure we'll get into those details, but you're talking about, at the least, lawyers and land transfer tax. You need to be prepared with some savings. That's one of the biggest things.
We've gone over the savings part, and again, as you said, we'll discuss a little bit further, but what else? I mean, if I go into my bank and get a pre-approval, should I count on that as a given? Especially some of the times, those pre-approvals are lengthy in a timeline from the time I get it to the time I buy.
Well, when we talk about pre-approvals, the term mortgage pre-approval gets used a lot. You hear it a lot. I often try to steer people, clients of mine in the direction and say, you know what, let's talk about this as a rate hold. A pre-approval really is not an approval. And so, one of the pitfalls people could come into is thinking, I've got my pre-approval from my bank. That means I'm going to get a mortgage. And it's really not the case. It means, that's why I refer to it as a rate hold. The bank is willing to hold a rate for you for a certain period of time. But if you take a look at the fine print on your pre-approval, it will say very clearly, the bank is going to reevaluate you once you find the home that you want to buy. What
about things like buying from a builder? What should be some of the key things that, especially in today's market, that a first-time home buyer should take into consideration?
There's a certain aspect of buying from a builder that is very risky. In other words, you're signing a contract, you're signing an agreement, usually several years before the contract's going to be executed and you're going to buy your home. So you're agreeing to a home and a price for that home several years before you're going to close that purchase. And in the past, in the GTA and in a lot of areas, that's been no problem at all. Values keep going up, and by the time you close 2, 3, 4 years later, your home might be worth more than you're paying for it. And more recently, in the last few years, that trend has really reversed. And there are people who find themselves needing to close on a contract to purchase where the home is actually worth less than they're required to pay for it. And it's something that I do point out to people when they're considering buying a pre-construction. Hey, bear in mind, you're really placing a bet that the home is going to be worth what you think it's going to be worth when it's time to close the purchase.
Now, again, we're talking about getting people ready to buy a property. So we talk about down payment. Obviously, they most likely have to have a job and income, stuff like that. But what about their debt load? What would you tell them about their debt load?
Take as little debt as possible into the home buying process. When you become a homeowner for the first time, it's much easier to manage financially if you're not also carrying other debts with you. And also at the same time that you're saving your money for a down payment, there's a bit of competition for your dollars. Should I save my money or should I pay off my debt? I do try to encourage people, pay off your debt first, then save your money, and ideally buy a home without bringing any other debt. From the homeowner's perspective, it's much easier to manage. From the bank's perspective, who's looking at your mortgage application, it's easier to qualify if you're not bringing other debt into the mortgage application with you.
First-time home buyers, the government of Canada has come out and really tried to do a lot to help the first-time home buyer. They've come out with some new government policies. Let's talk about those kind of things. What are the new government policies that are going to help first-time home buyers and give them the advantage over a repeat buyer, for example?
So whenever we buy a property, we pay a one-time tax called a land transfer tax. There is a benefit to being a first-time buyer. You can get a discount or reduction on your land transfer tax. So that reduces your closing costs. That's a big advantage for a first-time buyer.
What about amortization? I mean, most insured mortgages require a shorter amortization. What has the government done to help the first-time home buyer?
So up until recently, if a buyer was going to buy a home and required insurance, the maximum amortization they could choose would be 25 years. And now first-time buyers have the option of using a 30-year amortization and still being eligible for home insurance. So the longer amortization, all else being the same, would give them a smaller monthly payment on their mortgage.
And sort of give them advantage on the size of the mortgage that they can qualify for. Let's talk about their down payment. I mean, we were just chatting a little bit about that. A lot of people save money in their RRSPs. The government brought in a new rule. The new rule is that they could borrow up to, I think it's $60,000 from their RRSP.
Yes. So you can borrow from your RRSP to come up with your down payment. We have the relatively new First Home Savings Account as another savings vehicle. Works a little differently than an RRSP. If I borrow money from my RRSP to help me buy a home, I'm borrowing and I have to pay it back.
Yes.
So as well as everything else, I'm supposed to make payments back to my own RRSP. Whereas if I save that same money in my First Home Savings Account and I cash it in and use it towards my purchase, I don't have to pay anything back. If I'm in a position to save, you can save up to $40,000 in your First Home Savings Account over the years. If I'm in a position where I've saved $40,000, I still have more money to save, then use the RRSP as the next slot to save my money. But recognizing that I would have to pay back, whereas the First Home Savings Account, I don't have to pay it back.
I'm prepping as a first-time home buyer. We talked about down payment. We talked about income. What about, and we talked about debt, but most lenders look at something called credit score, either coming from Equifax and from TransUnion. What would you tell a first-time home buyer to do with respect to that?
So absolutely. Credit score and credit history is the third big category that gets looked at on a mortgage application. We each have a credit score that the two companies, Equifax and TransUnion, keep track of. The higher the score, the better. The score is out of 900. Very, very few people are a 900. If you're in the 800s, that's outstanding. If you're in the 700s, that's very good. And if you're over 680, typically, there's no barriers to your mortgage application. But what can I do to try to ensure that I have a good credit score? I can have access to credit in the form of credit cards or personal lines of credit. I can make my payments on time. And I can carry little or no balance from one month to the next. So ideally pay those off in full every month. But certainly if I were to have credit cards, lines of credit where I'm maxed out, that's going to hurt my credit score.
We're now in a little bit of an environment where, we hear a lot of people in our industry talking about this pent-up demand with first-time home buyers, but we're not seeing it. And this comment about pent-up demand has gone on for better part for the last 2 to 3 years. Everyone's sitting on the sidelines, but we're not seeing anyone sitting on the sidelines. We're not seeing anyone getting off the sidelines. We see the banks dropping rates further and further. We're hearing in the market that, most mortgage rates are now starting with a number with a 3 in front of it. but yet we see people not coming to the market. You're out there. What are you hearing from, I guess, potential home buyers or first-time home buyers?
Yeah, in terms of why might people be staying on the sideline instead of deciding now's the time I'm going to jump in there and look for a home? Certainly some of the comments that I hear are people who have seen home prices come down over the last few years. The trend over the last few years has been prices dropping. And for some people, that makes them ask the question, are they going to continue to drop? Do I want to buy something that's going to be going down in value, continue to go down in value after I buy it? So some people are wanting to wait until the prices level off, but I think that sort of begs the question, how's anybody going to know? I think predicting the future is hard for all of us, and the experts try to do their best, but they're only estimating. But that's one of the reasons that I hear from people is, prices are still going down. I want to buy at the bottom.
You hear economists in the news and the press, and they're biased. They work for the banks mostly, or the lenders, speaking about rates not going down any further. That we're probably at the bottom at this point in time, sparing not a financial disaster or not a pandemic. In your opinion, are we seeing the bottom of the interest rate market right now?
I guess if I knew the answer to that question, Nick, I probably wouldn't be sitting here. The trend has been rates coming down. Over the last 2-3 years, rates have been coming down. The trend in the last couple of months has been maybe a little more stability, leveling off. The decision last week by the Bank of Canada was to hold rates as they are. A bit of a signal that maybe we're in stable territory right now. I think we'd be surprised if we saw rates start going up very much. I don't think anyone's expecting rates to go up, but I think we'd be surprised to see rates go down a whole lot further. Historically speaking, being in the 3s is a pretty low mortgage interest rate.
Historically, as you said, 3.5%, 3.75% is the actual average of a mortgage rate over probably the last 20 years. So we're sitting where the median or the average has been over that time frame. And it's a good time then to maybe consider borrowing money to buy a home. As an investment, house is a place you live in, but as an investment, is real estate, in your opinion, a good product to buy?
You mentioned it's also somewhere to live. So, do we emphasize the investment aspect, or do we emphasize putting a roof over my head and my family's head? But, looking at it as an investment, you're putting a lot of money in a single item, right? Meaning it's probably the most expensive thing you own, and you can't sell 10% of your house or a quarter of your house or half your house.
Right.
So as an investment, there's a lot of risk to looking at it as an investment. And I try to encourage people, if someone asks me, Brian, if I buy a home, is it going to be a good investment? My first question is, how long are you talking about? If you're talking about 10 or 15 or 20 years from now, yeah, I think buying real estate is a very good investment for a 10 or 15 or 20 year time horizon.
Right. If
somebody says, is it a good investment for the next year or two, and then I'm going to flip it? That's not really something I want to take a strong position on. That's where it becomes much more risky. If we have a couple of great years in the economy, sure, you might flip a house in a year or two and make some money. But really, you should look at real estate as a long-term investment.
I'm a first-time home buyer. Again, I've done everything you said. I'm looking in the market right now to buy a house. I've got a down payment. I have an income. Put the two together for me. What amount should I be looking at? What are the two numbers I should be looking at to determine what my maximum purchase price should be?
So very roughly speaking, if your income is what we refer to as verifiable for a mortgage application, let's make it simple. Say you're a full-time employee with a paycheck. You're likely going to qualify for an income that's for a mortgage that's roughly 4 times your income. That's a good starting point. If you're bringing a lot of debt into the mortgage application, that might change things a little. That might reduce the amount of the mortgage you're going to qualify for. But as a starting point, around 4 times your income.
So 4 times my income plus my down payment should give me an idea where I should be maxing out on prices of properties that I'm looking for.
Yeah, that's a great starting point.
So Brian, again, I'm a first-time home buyer. Lots of different professionals to look at. I need a mortgage. Where should I be looking?
Well, so as a mortgage agent and working with somebody who's a first-time home buyer, I think the main things that I can offer you as a mortgage agent, 2 main things. We're going to go through an exercise, go through some numbers, and I'm going to put together an application with you. So that involves me asking you for some information. And then I'm going to be able to provide 2 things for you. I'm going to get you what everybody calls a mortgage pre-approval, what I like to call a rate hold. So I'm going to get you a rate from one of our lending partners, and we're going to be able to hold a rate for you for up to 4 months. That's number one. So you've got a rate. And the second thing is I'm going to be able to help put together a budget for you, a realistic budget, so that when you're out there looking at homes, you can be confident that you're looking at homes that you can afford. Nobody wants to find a home and fall in love and then realize they looked at the wrong home and they can't afford it.
Brian, I go to my bank. It's one lender. If I come to you as a mortgage agent, how many lenders do you have at your fingertips to help me get a mortgage?
Well, here at Northwood Mortgage, we work with dozens and dozens of different lenders. We work with the big banks. We work with credit unions. We work with trust companies. We work with what we call monoline lenders. There's a lot of options.
Any other professionals other than the mortgage agent that someone should be considering when they're thinking of looking for a home?
Well, certainly a realtor is going to be very valuable to you. Realtors, hopefully somebody who knows the neighborhood that you're interested in, knows the type of home. So a realtor is going to be very valuable for you. And a real estate lawyer. Some people wait till towards the end of the process to talk to a real estate lawyer, but they can add a lot of advice right from the beginning. A real estate lawyer is going to help you with the details of understanding an agreement you might be signing, and ultimately they're going to help close the transaction for you.
What about insuring my house?
Yes, absolutely. If you're getting a mortgage, you're going to be required to have insurance on the house. If you own a car and you have insurance on your car, that might be a good place to start. Most brokers who offer car insurance also offer homeowners insurance. You may also wish to speak to myself or other professionals to get an introduction, but certainly you'll need home insurance as well.
Well, Brian, thank you very much for coming in today. It was a great pleasure to have you here and to get all this valuable information. And to my loyal followers, see you next time on The Mortgage Den.